Today is Monday, June 6th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Steve Freed, ADMIS Vice President of Grain Research, and Alan Bush, ADM Investor Services Senior Financial Economist. Starting with the financials this morning, Alan, what are the main economic reports that traders will be following this week?
Well, it really looks like there's just one really big one. That's the May Consumer Price Index. That'll be out on Friday. And right now, the estimate is for, on an annualized basis, for that to be up 8.2%. But that would be down from the previous month. So there may be some indications that the rate of inflation may be peaking. Also, we have the excluding food and energy guessed at an annual rate of 5.9%, and that would be a little bit lower from the previous month's 6.2% increase.
And the S&P 500 futures are currently trading in a 6-day congestion pattern. Which direction will we break out of this chart pattern?
Well, the rule of thumb for all congestion patterns is that approximately 60 to 65% of the time, prices break out in the same direction that they pattern. So I'm believing that we will see a breakout to the upside in the stock index futures. We're seeing good gains today on very limited news. So that also an indication that we'll probably see higher prices. So from these current levels, I would expect some follow-through gains in the S&P 500 futures.
And looking at the Fed and interest rates, it's widely anticipated that the Federal Reserve will hike its Fed funds rates by 50 basis points at both the June and July policy meetings. What do you think the Fed will do later in the year?
So following that, there are 3 more meetings, and there's some talk that the Fed will follow through with more 50 basis point hikes. I am not in that camp. It seems like the majority view is that there will be smaller increments, probably 25 basis point increases. But I'm also believing that there may be at least one of these meetings where the Fed pauses, and that would be in line with the thinking that there will be a slowing rate of growth in the economy and also possibly peaking inflation. So I'm believing there will be a less aggressive and a less hawkish Fed later this year in those final 3 meetings of the year.
Thank you, Alan. Steve, turning toward the grain markets, what's the latest on U.S. spring and summer weather?
Well, so far in the month of May, the weather's been good. It's actually been a little bit too wet. Temperatures actually a little bit on the cool side. The weekend maps showed a dirty ridge developing across the southern third of the U.S. On day 11 of the maps. Now, this morning's 6 a.m. American model is not quite as aggressive. We do think, our weather guy thinks that the ridge will develop. As long as the jet stream is as fast as it is, it won't be prolonged. But he thinks by the middle of June, or maybe even later part of June, that a ridge will develop and the jet stream will be slower and we'll see some drier weather. 30-day outlook for rainfall across the Midwest has rains mostly in eastern Kansas, Oklahoma, and Missouri, with no rain in Nebraska, South Dakota, Iowa, Minnesota, Wisconsin, or Illinois.
And Steve, do you have any updates on the efforts to open Ukraine grain and soy oil exports?
Well, for the last 3 weeks, we've been trading a lot of news about both UN and EU trying to convince Russia to open exports for humanitarian aid from Ukraine. And there is a meeting this week in Turkey with Russia and Turkey trying to come up with some kind of plan to open Ukraine exports. But over the weekend, 2 key Ukraine ports were bombed by the Russians. There was damage done to grain elevators, including a Cargill elevator. And Ukraine came out and said they will not agree to any plan that comes from this meeting between Turkey and Russia. So we're kind of back in the concern that there may not be any exports out of Ukraine, and that's why Wheat's up 57 cents today, and corn's up 11 cents.
Finally, Steve, we haven't talked much about China this spring, as I think the trade with China has really taken a backseat to the situation in Ukraine. What is the latest in regard to China commodity imports?
Well, over the weekend, China is relaxing a lot of the COVID restrictions. People are still afraid of the COVID spread, especially in Shanghai. But these reduced restrictions has people hoping that China will begin to import commodities. So, you've got coffee, cocoa, sugar, cotton, all these markets, soft markets up. And you've got at one point crude at 120. It backed off a little bit, but there are some people think that the demand will increase this summer and winter, and we'll trade at least $140 crude at some point in time. The soybean market, I think July beans expected more demand out of China. We could test the all-time highs at 1794. And I think eventually July corn will trade over 750 and test $8. Nearby Chicago wheat's probably worth something more like $12. And all of this is kind of opening up Chicago, opening up for China imports. The Biden administration is also talking about reducing many of the tariffs that the Trump administration put on China, which could also open the door for more China trade.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.